U.S. President Donald Trump has eased tensions in the gold market by clarifying that no tariffs will be applied on gold. The prices have been swinging sharply in global markets as investors grapple with a mix of economic uncertainty and shifting expectations for interest rates. After hitting a record high last week, gold fell sharply in the previous session. It was driven by investor caution ahead of key policy announcements from Washington. The recent volatility stemmed largely from confusion surrounding the U.S. administration's stance on bullion-specific tariffs. Reports of tariffs on imported 1 kilogram gold bars triggered an initial price spike, but as investors awaited official clarification via an unexpected executive order, markets began to unwind some of that enthusiasm. The dip gained momentum after Trump's clarification. Adding to the pressure is anticipation around the upcoming U.S. Consumer Price Index data. Forecasts suggest core inflation may rise. That could complicate the outlook for interest rate cuts, which typically support gold by reducing the opportunity of cost of holding the non-yielding asset. Now, despite the recent retreat, gold remains elevated due to broader concerns over economic stability, Fed leadership uncertainty, and geopolitical tensions. A softer-than-expected U.S. jobs report has strengthened bets of September rate cut, but inflation data and global trade dynamics can still shift the narrative. The uncertainty has spilled over into other precious metals as well. Silver, platinum, and palladium have all faced downward pressure as gold's retreat dragged the broader metals complex lower. With the dollar fluctuating and U.S. monetary policy in flux, gold remains sensitive to headlines. Now, despite clarity from the White House and more visibility on inflation and interest rates, volatility is likely to persist not just for gold, but for the entire precious metals market.